Just one of those days, Aisha, where you cannot find a bright spot. It's a hard opening. It's a tough day. Sometimes all the bad news comes together. So I guess right now it's HUL volume growth, GST collection, global sell-off, the fact that Buffett is saying that he's not finding any value, and I'm sure my next guest Raamdeo Agrawal, when I'll get him to react to Warren Buffett's speech, he will also be reacting in the same manner as how a lot of market men have said that how can Buffett not find value in this kind of a market when he's saying that you should buy equities. Raamdeo, good morning. Thank you for joining us. What should we start with? The market sell-off, corporate numbers, or the view from Berkshire AGM, where Warren Buffett has said that one should not buy bonds for long term, you should buy equities, but he's not finding any value in the market.
So good morning, viewers. I think it's a pleasure to be with you all, particularly after the Berkshire AGM. I mean, I really miss the trip to US and that 45,000 people coming along, so many new people to meet. And even Mr. Buffett used to be very buoyant and jubilant when he used to see the people coming from all over the world. And there used to be a lot of laughing and cracking jokes between him and Mr. Manjar and all. So that was all missing. I think it was a very serious business. And the backdrop was also, kind of this COVID pandemics and things like that. So it was but I think it was one of the most wonderful teaching lesson by Buffett in this uncertain times. So I think by hearing you get 5-10% of what he said, but if you read the script, then you realize the seriousness of seriousness of the situation, and all the teachings of Buffett has been repeated line by line. So I think it is one of the most wonderful AGM script, and I would recommend everybody to go through that and take one's own whatever is the learnings.
Okay. Now, Raamdeo, the puzzling revelation was that even when US markets fell because of COVID crisis in the month of March, Berkshire Hathway, which is maintaining that, look, we think that equity will create more value than bonds, and you got to be stupid to be buying bonds right now, yet they are not finding any value. They've not bought anything. In fact, they've sold the airline stocks. Isn't that puzzling? That we saw gut-wrenching fall in the month of March, and Berkshire Hathway was on the sidelines, even though they're sitting on $100 billion of cash.
Yeah, so that was the main question. Everybody wanted to hear the explanation for Buffett not buying. In fact, on the contrary, he said, I'm collecting more cash. In fact, he is borrowing in the market. I believe he issued zero coupon bond in Europe, in Japan, and collected a few $1 billion. So he's saying that I don't know what we are in. And he went to the extent of even explaining 231 years of US history and what all big problems came. But I think most telling was in his presentation, what struck me is the experience of 1929 when depression time happened. So in 1929, I think Dow fell from 300 to 240. Sorry, it fell to 300 to 200, and from 200 promptly it corrected back to 240. It was 20% rally from the bottom, and a lot of people, they thought the way we are thinking that worst is over and maybe probably things are going to be okay. And then from there it fell to 41.22 in next 1 year. It was more than 80% decline from that corrected position. So he was saying that these things are, and he's saying that the current problem reminds him of all those kind of tragedy. I mean, he's one man who has seen all of it. I mean, he was born in 1930. He's born in 1930, and he bought his first stock in 1941. So he was around the market, and he has seen it all. And so I would think that his fearfulness right now about the current situation, he is not feared to be in the equities, but he is fearful that one problem leads to another problem. Like problem of COVID has led to, say, decline in the oil consumption because everybody is locked down. That has led to the collapse in the oil price. That has led to the future going to -37. So you don't know where you'll be hit. So he's saying that he is not capable to figure out what is the risk right now, and he has multiple businesses which are also impacted, and the nature of business of doing his insurance business, where he has underwritten trillions of dollars of risks. So he would be right now he would be very, very contained in terms of passing through this bad time without much damage, because he doesn't know what is the kind of damage which is coming to him. So he should be more than prepared to meet any obligations which come in. He goes to the extent of saying that he would not like to be at the mercy of friends or strangers for any kind of exigencies which might come. So he's just saying that this is not the time to be greedy. This is the time to be, and he's saying that it's not raining gold. So he's not saying what you said is right. He's not saying deep values. So I mean, a lot of these things are there in his speeches, but clearly he was he's not as jubilant, and he's more fearful how this thing is going to pass through.
Is this largely because of Berkshire Hathway's insurance business that Buffett is sounding that bearish? And frankly, for some companies which are not in the reinsurance business or the insurance business, they don't need to worry. Is it the insurance piece which is making Buffett so worried, and that may not be a true reflection for everyone?
One is that definitely is one of the reason, and so his risk basically he's saying that he's not able to see the end game. You know, what is the size of the risk which we are in right now? So I think he has quoted that National Health Advisor Fauci or somebody, and he was he was praising him a lot. But basically he's saying that basically he's a person who looks for certainty, and he's not able to see, he's not able to size the problem. And since he's the world's biggest risk underwriter, so he would definitely be worried in terms of from where all claims can come and how big could be the claim. And last thing he would want to be a situation where the claim comes and his own balance sheet is lack of cash. So I mean, right now, since it is the biggest unknown he has ever faced in life, so he would like to just not gamble on that unknown. Of course, get onto the business of investing.
Now, Raamdeo, you're a Buffett follower. Buffett is not sounding all that bullish. He's the same Buffett whom we know bought his first stock when Pearl Harbor happened. He's the same guy who bought 5% stake in Bank of America and in Goldman Sachs at the peak of the crisis. If Buffett feels there is little value in the market for someone who's ready to take a risk, who understands risk, who's not shied away from taking risk, I'm sure your clients in PMS and mutual funds would say, Raamdeo ji, if Warren Buffett does not find value in the market, will that change your view, and will you be telling your fund managers now to raise more cash?
Yeah, so there are a few different situations for him and for us. One, as far as 2008 is concerned, what happened was that the Fed was little behind the curve. The fear was the whole market was gripped by the fear, and the fear crashed the prices to such an extent that there was even with the Goldman Sachs kind of guys, there was a fear whether they'll survive, and hence they went for the support from Buffett, and many companies, they came to them to get some crazy deal from them, where they were getting almost a fixed coupon of 12%, 15%, just to give few $1 billion to them. So this time, seeing that particular situation, the Fed did one smart thing. They front-loaded the entire relief. They flooded the markets with the liquidity, and they gave the money to not only big guys, but even to small guys, even before they needed it. So that fear didn't go to a level where there was a crisis, which happened in 2008-9. Learning from that, the Fed was very smart. So these guys, they are used to seeing, I mean, the old belief is that when the crisis happens, the fear deepens and the fear leads to the crisis, and the crisis produces the kind of prices which has not happened this time. And in fact, it bounced back because of the monetary and fiscal support by the US government. So I think that has been a surprise. So they couldn't get the kind of lollipop they were looking for in terms of deeper value to their. And second is their size of the bet. I mean, he's almost, I think, $370 billion net worth. I realized yesterday, it is the world's largest net worth company. I mean, there is no company in the world which is as big a company as Buffett in terms of net worth. So $370 billion, and the size of the bet has to be very large. And the bet has to be very, very lucrative for them to make a decent amount of money. And that's what he's saying, that at this juncture, he's not seeing the values out there in the marketplace. So for us, that is not the issue. For us, we are looking for smaller opportunities, and our buckets of money with one manager is very small. So we don't have to buy 15, 20, $30 billion worth of stuff. I mean, I'm saying we don't have to buy 5,000 crores or 10,000 crores worth of stuff at a given price. We are happy buying very, very small pieces of businesses. So I think the challenges are very different at our end, my manager's end, and at Buffett's end.
Okay. Are you surprised with the strength what Indian markets have exhibited? I'm keeping today's 4% selling aside for a minute. But in general, from 7,500 to almost 10,000, blink of an eye. March, Mr. Agrawal, when we spoke, we used words like panic, crisis. In the month of April, we are using words like comeback, rally, and FOMO. In 60 days, I guess this market has shown us all sides of human behavior.
Nico, I'm most surprised, pleasantly surprised to some extent, because as a net buyer of the equities, we are very happy to see much better quotations, much higher quotations in the market. So there is a huge recovery in the marketplace, almost 20-25% from the bottom, or maybe even 30% from the bottom. I mean, when you look at the absolute peak of 10,000 day before. So clearly, it's a most surprising thing, and particularly last 3, 4, 5 days, when it was going up. I mean, I used to think market is going to be down, today is going to be holy, and by evening it used to be 2%, 3% up. So, I mean, that's the nature of the market. I have never been able to get it right, but this time it is completely off my capability to predict anything, even on daily basis. So, yes, completely surprised by the size of the recovery. And despite the fact that on economic front, like a GST number, that was completely stunning to me, that I thought it would be more like 65-70,000 crores for March, because literally 2/3 of the month was normal, only 1/3 was lockdown. But the loss on GST is 2/3, not 1/3. So that's the nature of the economy, you know. I mean, some companies, they said, bulk of the March ending, I mean, year ending sales happened in last 10-15 days. And that's what didn't happen. Suddenly everything had to come to a standstill, and hence we lost all the revenues. So, you know, the kind of damages which have happened in the short run, like Maruti declaring, all the auto companies declaring literally 100% impact on. I mean, we were knowing that everything is shut down. So and then the correlated damages which is going to happen because of labor has gone, or a lot of things. I mean, now we'll come to know what is the damage actually. Once it opens up, then we'll realize the extent of damages. But my sense is that market is not fully reflecting that.
Now, you know, you've always said that, look, market is always a weighing machine. You have to understand that fear and greed, opinions, macro, technicals, they coexist in the short term. So let's talk about next 2 to 3 years. For somebody who's, let's say, buying into stocks, what is available on the table? Do you think right now the market is not giving you anything where even if economy recovers, you will make money? Or markets are telling you that there is too much of pessimism, there's too much of fear, and markets and economy will surprise you, and that is what markets are reflecting. What I'm trying to understand from you is that for an investor right now, what is available?
See, it all depends on what you understand, Nikunj. Even yesterday, Buffett said the same thing. You have to go by your own understanding of things, and every person understands things differently and different things nicely. So where you have the comfort, and wherever you find fear in the market right now or uncertainty in the market, is bringing on the prices significantly below the fair price for whatever reason. That's where with confidence you have to go and buy into them. Who knows how long this uncertainty will continue. But what we have seen in the past, particularly 2008 and 2000, the people who, after the collapse, when the market hits the bottom, or near to the bottom, nobody can get the bottom, but near to the bottom, people who buy into pessimism, when the environment of optimism comes, which definitely comes, and it will come, I don't have any doubts, and 3 year to 5 year, and that's where I think even that's also what he was saying, that he would not like to speculate. He would not like to buy for 2-3 years, but when it comes to 10-20 years, then he's sure that America will win and the stocks will win. So I think right now the message which is coming is that don't look at a shorter period of time. Buy the stocks which you understand, but buy it for a little longer period. Buy it for say 5 years, 7 years, those kind of things. Because this uncertainty can last for a very long time and it can actually damage. And another thing which came out yesterday is that if you are getting into equity, and he in fact said in his lifetime, Berkshire Hathway went 3 times in the history without any mistake of there was no problem with Berkshire Hathway, but the stock price went down by more than 50% 3 times in the history. Once I saw in Y2K, it came down from 75,000 to 34,000. That I personally saw that. So clearly, what you have bought, even if the price is lower, that's a what happens is that we take a lot of signal from the market. The moment we have bought the stocks at 100 and it goes to 70, 60, then we start questioning our own judgment. That's not the way to go. Right now, this is an uncertain world. Without mistake of the company, the quite possible that stocks can fall way below your comfort zone. So you should be very careful in what you buy and at what price you buy. If you're not comfortable, it is much better to sit on your cash.
Okay. So, Mr. Agrawal, my next question is that we could be in for a painful period for this entire calendar year or entire financial year. We don't know how many skeletons will come out of the cupboard of even best companies when things will start unveiling. But where do you think beyond FY21, you are reasonably confident of the business or the strength of that business or strength of the franchise or the manager who's running it?
I just lost a little bit. What is the question, Nikunj?
My question is, Mr. Agrawal, that we both don't know, right, Mr. Agrawal? My question is that for next 2 quarters, maybe this calendar year or this financial year, we don't know what will happen to companies. Who will have a write-off, who will have a write-down, who will have a demand problem, who will have a supply problem. Let's keep it aside. There is uncertainty in the short term. I'm saying let's next 3 to 4 quarters. But beyond that, if somebody has to look at the market, beyond 2021 or FY22, where do you think the strength of the business or the quality of that business or the man or the manager who's running it is intact? Where do you think the short-term shock is going to be disruptive, but the long-term earnings trajectory is going to be intact?
Yeah. So again, you go back to when you do things in uncertainty, this is the phase of uncertainty. One of the biggest safety net for anybody is to buy cheap. You keep much larger margin of safety. You have to buy in normal times for 100 rupees things, I'm willing to buy at 80. Now, I would say I would buy 100 rupees thing for 60 and 50. I think that's where Buffett is saying that it's not raining gold. So clearly right now, market is saying, okay, 100 rupees thing is available for 80 or 90. Are you willing to bet? So, but uncertainty is pretty long. So what I would look at is, one is that, of course, the price has to be extremely comfortable. But what I buy, that is also very important, because your longevity, your success is dependent on what you have bought, the quality, growth, and longevity of both of them. So once I am sure about the quality of business, quality of management, and the longevity of the, I mean, beyond this 1 or 2 years, if I am sure about the longevity of the company, that boss, kuch bhi ho, this company is going to survive the downturn and it will again come out a winner. That confidence, if I have in the management and the business, then I go and seek much lower price. Okay, this is worth $100. Can I get it for 60? Can I get it for 70? I mean, that would be the way to go. I mean, this is a very cautious time. This is very crazy time where you are walking in, you are getting into unknown and unknowable, and yet you are paying the price of as if you have seen everything clearly.
Okay. Have you stress tested your portfolio? And is your portfolio current reflection of the companies where you think that you see short-term pain but long-term gain, or your portfolio churn right now is in works?
Yes, the stress testing is on, and it is always on, in the sense that it is 24/7. Every day we are, I mean, the fund manager is looking at it, and my job is to see that, keep prompting them that the problem can come from here, problem can come from there. So yes, and we are fearless in terms of cleaning up. Even today, if I find a stock which is not matching with our expectation, or the business have changed, or their prospect have changed, I would not hesitate to chuck it out completely. In fact, one of the learning about in this Buffett seminar was that he has openly accepted that airlines business was a mistake. I mean, it is completely his mistake. Management is fantastic. All four management he complimented. There is no mistake of the management. He committed the mistake. He didn't know that. See, first he for the first 30-40 years, he badmouthed the airline business as the worst possible gruesome business in the world. And then he fell in love last 5 years back, and he bought 10% in limit up in all the four airlines. And now, in one shot, the moment he realized that I mean, whatever has happened to airlines, he said, I have sold every single piece of all of them. So, I mean, and he has not bothered about trimming it by half or 70% or 80%. He said, we have nothing to do with now airlines. So I think what is important is to, even in this, at this point of time, and that too he incurred loss. I mean, after holding it for 2, 3, 4 years, he sold it at loss, 100%. So what is important is that if you find something has changed forever, or the prospects have changed beyond recognition, sell it and get out. I mean, don't try to, don't keep waiting for the prices to go up a little bit here and there. I think that, I mean, a lot of companies, a lot of businesses are going to go through that phase. And that's what we are doing right now. We are cleaning up if there is any chance in our portfolios. And we are making the, in any case, because of QGLP, our portfolio was broadly, I would say 90%, it was foolproof for the bad time. I always used to say, I mean, portfolio should be good. In good time, every portfolio is good. But how good is a portfolio in bad time? So I was always mentally prepared for bad time, because I know this time comes. I didn't know it is going to come like this and so quickly. But QGLP philosophy was always for the, I mean, taking care of the bad time for sure.
So would you, and last question, would you like to throw more light on, are there any large, big changes you've done to your holdings? I mean, for example, your large holdings have been insurance, private banks, autos. Have you changed that stack in any which manner? And if I have to divide the world into two parts, the pre-COVID world and the post-COVID world, how has your view changed in the companies where you've either sold or you've added or you've completely exited something?
So I mean, we have become little, I would say, I mean, every manager has a different, what do you call, mood and, I mean, space also to execute. But I have become, bullish on telecom in India because we are all living off the telecom and opportunity looks to be immense. So I've become a little bullish on telecom longer term in the sense that maybe 1 year will still remain challenging with AGR issues and a whole lot of it. But I think the things will look much better for a longer term. So that is one thing. Second, I think the capex in the system might get delayed. So all the capital goods companies, I mean, this is the feeling right now I have. Government finances will be impaired. Private sector will be running way below the capacity utilization. So the new capex will get delayed somewhat. So the prospect for all the capital goods companies could be challenging. The way we are thinking that they are going to be the second term of this government will be led by huge capital expenditure build-up that has taken a backseat. So those are a few things we are seeing. Apart from trimming any of the BFSI segment where the weak underwriting is visible, we have clearly cleaned them up and bought better franchises.
Raamdeo, such a pleasure having you on the show. Thank you so much for taking the time out and sharing great insights about the markets, economy, fierce causes out there. And stay safe. We'll see you on the other side of the lockdown.